Hello, everybody. It is great to be here one more time today. My name is Gary Fowler, and I'm the CEO, president, and founder of GSD Get You Done Venture Studios, a premier AI and quantum venture studio located in Silicon Valley. We believe that intellectual capacity is evenly spread around the world, but opportunities are not. Today in GSD, we have 143 companies from 57 countries. So with that, I have my incredible guest today, a good friend of mine, Brian Flynn, and Brian is with DiamondStream, as many other things. Valaris, founder of Valaris. He's into casino marketing with the Casino Marketing Alliance, Stellar Labs. I mean, on and on and on. And he also worked for GE Capital. So with that, I'd like to bring my good friend Brian on board today. Hey, Brian, how you doing today?
Excellent. Great to see you, Gary.
Good to see you, my friend. So, we were just talking. So you were doing a little bit of golfing, and you said you won a tournament. Now, how does it work winning a tournament but not being a good golfer? Is there something I need? This sounds like the kind of guys you go and play in the pool hall and say, I can't play pool.
I know. I've definitely been accused of sandbagging for sure. But no, there's an alternating shot format, which is the hardest format in golf. I was paired with a scratch handicapper, and so I could count on him. And the only issue was how bad was I going to screw up? And I just happened not to screw up for the 6 holes of the tournament and beat 13 other teams and won about $15,000 worth of golf, which is crazy.
You can't beat that. That
was great.
Congratulations.
Yeah, thank you. Thank you.
So, going down through it. So, as you went down through, you went to Williams College. You went to London School of Economics and Political Science in 81. You went down through, as you were going down through this journey, and, from GE Capital to DLJ, Bane and Company, what are the lessons that you learned that helped you to create $1 billion company? As you went down through it, I mean, when did it like a light go off one day, or was a continual process? What was it like, Brian?
Well, I guess I grew up in a really small town of fewer than 800 people in Western New York State called Hammondsport. And my parents instilled in me the belief that anything was possible, even for a kid from a small town like mine. And so I always believe that if you kind of have a dream and really work really hard at it, you might achieve the dream. And if you don't achieve that one, you might achieve something else that might be even better. And so through the course of the education, I just was, just getting the skills, acquiring the various skills that I could use to try to do something transformative for various industries and try to change society as much as I could as one person and try to get myself aligned with the best possible partners I could, because no one person can do it alone. So
you went down through it. So, you went down through, you went into financial management program at GE.
Yeah, great program.
And then you went into as a summer associate at DLJ.
Right.
And then Bane. So what was it like working at Bane?
I got to work for Mitt Romney, who was the real deal. The guy's incredibly impressive. And he was just one of the cases that I worked on to help. I led the due diligence team to convince Bane Capital that it was a great idea to acquire a company called Vecco Gray. And so it was a turnaround. And the idea was that once we completed the acquisition, that I'd wind up moving to Scotland to help manage the turnaround from there, because that's where they were losing most of the money. And so we got it to break even in 6 months, and it became a fantastic return for them. And so the experience at Bane overall was phenomenal, because all the people at Bane were incredibly smart. They were really driven. They were really good people, and they weren't just really good people by themselves. They were really good team members who could collectively solve problems that would be very difficult for others to solve. And then after solving the problem, which really was about 10% of where the effort went, then 90% of the effort went into convincing the client to actually follow the advice that we had, and make the client believe that the advice we were giving them was really the client's idea. So they would take ownership of it, because eventually we'd be moving on and they'd still be there. And so doing it for ourselves is probably not the best motivation. I think that was a great thing as a consultant, but I think that perhaps as a politician, it didn't exactly help Mitt not to be boasting about the various accomplishments that he had, because he's absolutely a phenomenal person. And so it's that Bane Mafia, that Bane network that I developed over the 4 years or so that I was there, that really helped me to gather people who would later become fellow board members with me. They would introduce me to different companies that I could invest in. They invested with us multiple times. And my number one partner for the past 17 years has been Dean Donovan, and I met him at Bain. And so it's worked out beautifully. It was a hugely impactful decision for me to leave Wall Street during the boom in 1987 and prior to the crash. And
yeah, I was going to say, you got out of Dodge just in time, right?
I did. Just sometimes, Gary, timing is all about luck and not always about skill. And so I went to Bain to learn how to run companies, so that later I could leave Bain and start to work to really help transform different companies and then start companies. And that's what I've done.
That's phenomenal. So how did you get in? Did you wake up? So you're in a little town in New York, but how in the world did you get into casino marketing? Because I'm sure you didn't have casinos in your town of 800.
No, definitely no casinos there. And I'm not a gambler. And my partner, Dean Donovan, he's not a gambler either. And so it's, serendipity. I had a friend here in Seattle who asked me to help him with a company called LasVegas.com that Mandalay Resort Group and Caesars, then called Park Place Entertainment, was trying to acquire because they wanted to transform it from a media company to something that could put heads in beds in Vegas. And so I helped him out with that. And that led me to want to buy that from them, because I thought that online gambling was only going to get bigger over time, and eventually the U.S. would permit it. And so I tried to buy it from those two companies after I helped them buy it. And I also had in my pocket Gannett, not in my pocket, that's mischaracterization, but Gannett, which owns 100 USA Daily newspapers, including USA Today. And I wanted to have a back-end technology platform that could be used to put heads in beds across America and other cities outside of America. And so when MGM said they didn't want to be a part of that larger vision, I left to go do other things. And so I started the airline with Dean and Kevin Wilson and some other people as well. And then I got a call from the guy from Caesars who said, "Hey, I've gone to work for this company called Global Cash Access. They dispense $20 billion inside 1,100 casinos to 15 million people. Do you think that the data is valuable?" And I said, "If you give me exclusive access to the data, I'll build a company around it, and I'll help you continue to cement the 80% market share that you have in the industry." And so for 12 years, we built a company that where we won many awards, helping casinos use that data plus other data to develop insights regarding player value and frequency, and then using other technology and predictive models, we'd figure out what kind of offers people wanted to receive and the format in which they wanted to receive them and the amount, et cetera. So it was really all math. We hired mostly Eastern European mathematicians to work alongside of us, and I was the front, the front guy for the organization to go and pitch and win over these casinos. And but after 12 years, it was great. It was great fun. Made a lot of money. It was a 35 times return on the investment we made in that business. But it really wasn't what we wanted to do, because first of all, we're not gamblers, and there's nothing wrong with it. I think it's perfectly fine if people go and spend time at a poker table or blackjack or in the slots or whatever, but it's just not for us. And so we try to figure out for the next 20 years or so how we wanted to best utilize the skills that we've been developing over the past few decades, and casinos just weren't a part of it. And so we exited that business.
So, as you went down through it, how did you deal with, as you're getting more and more successful, Brian, how did you deal with the money as you got more and more money, made more and more money? How do you manage the money? Because a lot of people, when they get money, sometimes they run through it, or they buy 3 Lamborghinis, and, my buddies do a lot of crazy stuff sometimes. But what do you do to be able to manage yourself so that you make the right kind of investments and you move in the right direction? How do you temper yourself?
Well, I think, people are born with certain proclivities, and I just didn't, I just wasn't born with the desire to own things. And so I really describe myself as not a thing person. And so I went 10 years without owning a car. And so I'm not,
You went 10 years without owning a car?
yeah, because I traveled so much. I had places in New York, Philadelphia, Chicago, Beverly Hills, Seattle, and a ski place in Beaver Creek, Colorado. And so, and these weren't all, I mean, they were investment properties. I owned one with some other friends, sort of a bachelor pad. That was the mansion in Beverly Hills. It was really to make
there
money.
You go.
It was the motivation was to make money. We made.
Yeah, I don't have a car, but I've got a mansion in Beverly Hills.
Yeah, it was a seven-figure return on that investment. So it turned out well. The Beaver Creek property was 3x investment on that property. And so whenever I actually owned instead of rented, it was obviously because I had a belief that I could generate a good return on that. But, for me, it's just, I'm really focused on building things and creating value for society. And I know that in the process of doing that, I'll create value for myself, and which is fine. But, but if you ask my kids, because they've asked me many times, like, Dad, if you earned, let's say $100 million in this company or something like that, what are you going to do with it? And I said, well, you're going to wind up giving most of it away. And so don't think that it's coming your way.
And they'll say, yeah, there you go.
Yeah. So
right in the pocket.
Yeah. I said, I don't really, if you ask my kids, what do I want for my birthday? What do I want for Christmas? They'll always tell you that I don't want anything. I want their time. I don't want them to give me store-bought cards. I make them, write out cards, handwritten, and then if it's not up to my standards, I chastise the particular child, especially one who I kept claiming she was writing me ransom notes rather than heartfelt cards, and so make her redo it. Ransom notes. It looked like it just wasn't something that she put a fair amount of effort in. But what I found is that over time, as the kids get older and they become more mature, then they tend to really pour their hearts out.
There's a thing called ChatGPT that can really help you out too.
Yeah, it can. It's a useful tool. Really useful.
So you've gone down through it, and what about Stellar Labs? What was that all about?
Yeah, so Stellar Labs, we were trying to transform the private aviation industry because there were a couple of facts that struck us as being really odd. One is that an $80 million plane or $20 million private jet would only be used on average an hour a day, whereas at Volaris, the Mexican commercial airline that we co-founded, that those planes get used about 13 hours a day. And so therefore, the cost of operating a private plane per seat mile is extraordinarily high. And then the other fact that we came across was that 38% of the time, the private planes you see in the sky only have the pilots on board because they're being repositioned. So if I wanted to go from Seattle to someplace in the Midwest or something like that, I'd be able to fly out there. But unlikely, it would not be likely that someone would want to fly back in the same direction. And so we wanted to try to create a marketplace for private aviation where demand and supply could meet up. And the reason that it hadn't been possible before was that the scheduling software, which is the source of truth of where a plane is and where the pilots are that are available to fly that plane, that truth lay and legacy, systems that were on people's desktops. And so it wasn't up in the cloud. So we had to create something that was up in the cloud where you could access that information on a real-time basis. So that would enable the operator of the private aircraft to be able to quote and give a hard quote and know what availability there might be or demand there might be on the other end to bring that plane back with other people on it. So we built that company or tried to build it as best we could. And then we wound up selling off the assets in a transaction to Magellan Jets, which is a fantastic East Coast-based business broker for private aviation, and they've got a number of other subsidiaries.
So, you went down through that, and How do you go down through and start a bank? What happened?
Uh,
You
yeah,
wake up
it's
one day and you say, now I want to do a bank. I've done all these other things, the casino. Now I want to go back and do a bank. How did that happen?
so a lot of times we'll talk amongst ourselves to try to figure out what's going on in the world and where things are heading, and then what could we do to help facilitate whatever's going on. And so in 2008, we perceived that there was a recession, a deep recession coming on. I think other people perceived that as well, but I don't think we were unique. And so then the question is, what can we do about it? So we thought, oh, banks are a terrible place to be, because the loan value on their portfolio will go down and they'll suffer huge losses. But the insight was, well, what if we started a new bank and had a clean balance sheet without any loan losses on it? Would we be able to build that bank organically? And then as the recession deepened, not knowing how deep it might be, we'd be able to acquire and consolidate other banks in the region. So we found a lift out team from Regions Bank in the Midwest, or actually Tennessee and Mississippi.
What's a lift out team, Brian? So for the audience out there who doesn't know what a lift off team is.
Oh, yeah. Lift out team is you find a group of people inside of a company who want to leave that company to run their own company. And so this team had really been the team to help consolidate acquisitions that Regions Bank had been making up until that point. So it was a team who had worked together before. And so we became the largest investor in that bank, and helped to grow it organically to 1.2 billion before we sold it to another bank.
Yeah, no, it's fantastic. And so, if you go into, we have a lot of startups all over the world that listen to our podcasts. And so if you're going down through it, we'll talk about DiamondStream partners next, but what kind of words of wisdom would you give to those startup entrepreneurs that are all over the world that, they've got dreams? What are like three things that, from your standpoint, Brian, that are really important to in terms of building $1 billion company?
It's all about demand. And so whatever you're trying to do, make sure there's actually going to be demand for it. And so we encounter a number of entrepreneurs who have various ideas and all that, but for which we don't think there's actual demand for that. And so you need to be able to prove that there is demand and that the markets are going to be big, and that you have a team, maybe an incomplete team, but you've got a team that you can build around to help you build the company over a period of time. And if you're solely focused on the money, you're really not focused on the right things, because if you wind up solving a need, a deep need, and there's significant demand for it, you'll make good money. You may not become the next Bill Gates, who's a great guy, but you may just make a few $1,000,000 or something. But importantly, it's got to be something that you have a deep passion for, and that you're not going to run, because what we found is that inevitably there are a million cuts that you're going to wind up incurring over the course of building that company. A lot of things are going to go wrong. Almost always you're going to have to pivot the business in some way. And it almost never turns out the way that you fully expected. And that's been the case every single time that we've started a company. It wound up requiring a pivot of some sort. Didn't mean that it became less profitable or anything like that, but it's just, you have to be ready, and you've got to be resilient. You've got to be really willing to do whatever it takes, as they say, to help the company become successful. And if all you're focused on is the money, you're not going to make it, because you'd probably be better off just stopping that risky endeavor and just joining some other company that's more stable and taking the income and the stock options or something else from that investment.
So if you're going down through it, how do you keep yourself up when you have those dark days? What do you do to be able to keep yourself to stay positive?
Well, I'm a spiritual guy, so I do a lot of praying on those days that are dark. I pray more than the days where things are going well, I think is likely the case for a lot of people. And I have a great business partner, as I mentioned, Dean Donovan, and then more recently, over the past few years, we've known him for a decade or so, but Dave Spurlock, who's the third partner, and we just we're able to co-commiserate for 10 seconds. And then for the most part, we really focus on just trying to take reality for what it is and try to solve the problems that are facing us right now that may not be fair. There are a lot of things in life that just aren't fair that you might have having to deal with. And Dean and I have one of our sayings is nothing is ever easy. It may seem like it in hindsight when we talk about starting an airline from scratch, and 17 years later it transports more people per year than Alaska Airlines and is perhaps the most successful startup airline in a generation. But trust me, it was not a smooth path, and there were a lot of challenges. There still are a lot of challenges, and so you've just got to be tough nosed and have a good partner. I think at least one.
So you went down through and you've done DiamondStream. Now, as you're going down through and you're exclusively focused on travel, transformation, and aviation.
Yep.
So how do you go from on one side you're building these companies, now you're investing? What kind of companies are you looking for? How big is the fund that you have, and what's important for you?
So there was an insight that we developed about 5 years ago or so. I'd looked at a company that I won't name now that didn't become successful, but they opened my eyes to the transformative power of electric motors, something that I hadn't really dealt with before. Internal combustion engines are efficient, really dependent on scale. And so over the past 40 years, the jet engines that you fly on have become bigger and bigger, and because they become more and more efficient at that scale. And so for regional aviation, it's really hurt them. So long haul aviation, it's really been just tremendous from a consumer standpoint. But for regional aviation, it's declined by about 40% or so, in part because the friction cost keeps going up with the amount of time it takes to get to the airport, to clear TSA, and all the other hassles that go along with it. And so we discovered that with the combination of electric aviation, hybrid electric aviation, and with AI, that it would simplify flying for pilots, the AI would, and make it easier to control the airspace, et cetera. And so there were a number of potential benefits from that the combination of those two major forces, along with three other forces, would enable regional aviation to come down in cost by as much as 75% over the next 20 to 30 years. And so it'll be transformative for society. So instead of driving 300 miles, which is what most people do now, 99.6% of all travel between 50 and 500 miles is by car or some form of transportation other than air. And so we think that air will go from being a teeny tiny bit of it to about 10%. So we don't expect that it will transform into something where it becomes dominant, but air transportation, commercial air transportation, is 1,500 times safer than driving a car. And if you can get there 4 times faster to an airport that's a lot closer, about 96% of all travel it comes out of 100 airports or so. And so it's kind of crazy, 156 airports actually. And so it's kind of nuts because there are about 18,000 airports in the US with paved runways. We think about 8,000, 8,500 or so could be used for regional aviation. And so we expect that over the next couple decades, your lives are going to be different. You're going to be able to travel to places that you hadn't traveled to before because you didn't want to take the time or the money. And so you'd wind up being able to live a richer life in that way. And then for business people, you'd be able to travel to go see clients that you otherwise wouldn't have visited. Zoom is great, but it's not as good as in-person visits. And you'd be able to perhaps live someplace further away from the office where you'll wind up working 2 to 3 days a week. And you might live 200 miles away from the office and not feel as though you're truly remote. And so we decided when we developed these insights that we'd literally drop everything. And so we sold the bank, we exited the casino business, we gave back all the shares that our investors' shares in the airline we founded, and we decided to focus exclusively on this area and become among the world's leading experts in the area, or try to, and really share with everyone what it is that our vision is, so that they can either agree with us and follow it, or they can bet against us. And sometimes we'll give advice to the industry that is not just not followed, it's that they go and invest in areas that we don't think are really productive from an investor standpoint, because we just hate seeing capital destroyed. We'd much rather see people invest in things that wind up becoming valuable to society as opposed to just a waste of time and money.
No, you're right about that. And, you're going down through it. So the startups that are out there, they're looking at opportunities. So you talk about, resilience, you talk about having a good partner. That's important. What else is important for?
It's always going to take more cash than you think. So if you think it's going to take, $5 million, it's probably going to take $20 million or something. And that's happened every single time for us. We thought the airline, we funded it initially with $100 million. It took about $196 million before we were able to take it public in 2013. And so it just takes more capital. The bank took more capital. Stellar took more capital. Just anything you could almost name would take more capital. And that's okay, because if you're going after a large enough market, and if the value that you're going to be delivering is transformative for that particular industry, you can suffer that and still, as an investor, earn a great return. And as a employee of the company or one of the co-founders of the company, you can still earn a great return from that. So when people, a lot of founders we find tend to try to be too stingy, I guess, in terms of wanting to not lose control, which I understand that, but not raise more capital when it's available. And Fred Zuckerman, who used to be the treasurer of Chrysler Motors, RJ Nabisco, and IBM, who was a key mentor of mine, he instilled in me the belief that always raise the capital when people are trying to give it to you, not when you need it.
Yeah, that's true. Nothing good happens, right, on that side when you need it.
Yep.
So, we're coming up to the top of the show. So closing thoughts. DiamondStream, how big is your fund?
So we write checks of $1 million to $20 million. I think the most we put into a company is about $30 million. And so we come in typically at late seed, Series A, Series B, typically when the company already has a product, they've got some customers we can talk to. And we really view ourselves as being a part of, a helpful part of the management team to help them see some of the mistakes before they make them and avoid them, make introductions that can be helpful. We're all ex-strategy consultants. And so we like to think that we can think dynamically and creatively about how they can make their company grow even faster than what they've been able to do. And since we've been there before and we've built 2 companies that got to over $1 billion, along with a number of other companies, we've had the experience from having made mistakes and learned hopefully from those mistakes so as not to repeat them. And then also having some good creative ideas on occasion that we then can help the companies execute on in a way that they otherwise might not be able to. And so we're looking for companies out there. Feel free to always reach out to me. We don't invest in very many companies, but you may be a founder of a company that would be a great partner for us. We are a great partner to be with. We wind up typically bringing in strategic partners, including Alaska Airlines, JetBlue, Lockheed, Embraer, AE Industrial, the list goes, Raytheon Technology Ventures. So there are a bunch of other companies, Hearst Ventures. I don't want to leave anybody out, but I can't help but do so because there's so many that we partnered with. But it's great, and so we'd love to help you. Try to build a great company someday, and that'd be awesome. That'd make me super happy.
No, it's great. $2 billion companies, and coming from a little city, a little town in New York with 800 people, it's amazing to go down through and do it. So, Brian, thanks for taking time out of your busy schedule. It's greatly appreciated. And thanks to all my guests for joining one more time. GSD presents Silicon Valley AI and Tech. And my name is Gary Fowler. I'm your host. Stay happy, stay safe, and stay healthy. I'll be back to you again soon. Brian, just hang on here. I'll be back.
Thank you, Gary.
Thank you.